The sell-off in Asia gathers apace, Mark, and we see futures for Europe looking pretty negative now as well. Expected to be down 1% or so in Europe. MXAP in Asia down by 2.5%. So that's the MSCI Asia Index. So we are seeing this weakness. This is attached to tariffs and further expectation of tariffs from the Trump administration, and a fear, I suppose, about how extensive the retaliation will be from China. What do you make of the price action around this?
It's extremely negative price action. I think there are a number of kind of themes hitting at once. Obviously, tariff deadline is getting closer, and it was kind of confirmed yesterday. And not only do we have the Canada and Mexico deadline confirmed, we had this fresh one on China. So the trade war is escalating yet again, and it's getting closer to kind of crunch time. At the same time, we've got more negativity around US AI. And that's a theme that's been running since the DeepSeek news a month ago, as investors realize that US mega cap tech won't be the sole beneficiaries or the main beneficiaries of the AI boom. In fact, it'll be global. And in fact, China, Hong Kong tech companies will do extremely well out of it. That's been further fueled by recent news about Tencent's later AI also doing very well. Baidu's meant to come through next month. So people are realizing that discounted tech stocks elsewhere can continue to gain value, and very expensive ones in the US are going to lose value. Now, in the short term, we're focusing on the losing value because even Asia tech suffered today. So we got the tech getting hurt. The most successful sector of recent years has been US mega cap tech. It is still expensive after the drawdown. So there's more downside to come there, and it's being hammered home by Trump on his tariffs. So it's a very, very negative moment, which means people are just selling winners out there, including getting out of the losers because they need cash.
Mark, if Bitcoin is a sentiment indicator, how negative is the message?
Not too extreme yet. I mean, in terms of Bitcoin's off about 27, 28% from the all-time high in January. It had 20% plus drawdowns last year. So this isn't yet extreme in Bitcoin. The broader crypto sectors got destroyed, but Bitcoin itself is kind of par for the course. Another maybe 5 or 6%, then you're getting the biggest drawdown we've seen in the last 2 years, and that will be much more dramatic. I think what's actually happening in the biggest names in the tech sector in the US are more important. Your Teslas, and the other popular trades like Palantir, MicroStrategy, some of that price action is very negative. And I think they're going to have much more downside into the close today. So yes, popular trades are really getting thrown out. The one that's probably most obvious is recently we're seeing gold even suffer, where everyone agrees fundamentally it should go higher, but people are just getting out of those popular trades, and I think that theme has more to run.
Mark, it sounds like, to your point, there's so many different market themes hitting all at once, as you point out. But I'm curious about how this bond market is digesting it, given we've seen a 40 basis point move in the last 2 weeks in the Treasury yield. We're getting a headline crossing our terminal now that the German 2-year yield is falling off the back of the French inflation data. What matters more for the European bond market? Is it the tariff story in the States, or is it the inflationary story right here in Europe?
I think right now, actually it's about price action. That's not the answer I was going to say as I started that sentence. I do think tariffs is more important than the inflation story, to directly answer your question. But I think right now, today, and possibly going to next week, it's about position management, it's about risk reduction. So it's one of those times that we get, once a year, once or twice a year, where price becomes the ultimate fundamental. And that's why don't try to look for exact fundamental explanations for every tiny move at the moment. It's about being safe.